Hi traders, this is Chris from CurrenSea with an update on the euro dollar and pound dollar. This is the euro dollar daily chart, and my message is going to be pretty simple, short and sweet. It is choppy and corrective, and just avoiding the euro dollar and pound dollar for the rest of the 2 days might be better. That is what we're doing for the moment with ECS Live. We're looking at other currency pairs at this point for trading purposes. These are very choppy times here for the euro dollar and pound dollar. If you do want to trade it, it might not hurt to keep an eye on the ecs.SWAT candles. If you are an ecs.SWAT or live member, look for a blue candle that can break above the 21 EMA. That's kind of the confirmation we're looking for. If you're not a member, then you can always keep an eye on price action candlestick patterns. Take a look at the 21 EMA zone, high and low. Wait for a good close that could probably close above this 114.50 level. And that's the breakout you're waiting for the upside. All right. Now we're still, when you look at this SWAT candles, you can see we only had that once or twice actually here in this ABC correction. Otherwise, we've had red and gray candles, the bears dominating the downside ever since April 2018, except of course this ABC correction where we had blue candles pop up. That's what we're still waiting for, in fact, for this bigger correction to the upside. But will it happen? I don't know, right? Because we're still in downtrend territory. Whether this reversal pattern will play out at the 113 level is still a open question mark at this moment. All right, we had pretty indecisive candles yesterday and the day before with two dojis in a row. Price can't break through 113, but it cannot break through the 21 EMA zone and the 114.50 level either. So it's kind of stuck in between these levels, and we're waiting for a breakout to the upward downside. I still favor the upside, but it hasn't happened yet. So, you know, it is getting a little bit boring, it's getting a little bit choppy, and this could last still, you know, this week, maybe even next week. You don't know how long this choppiness could last. But if it does push through to the downside, a bearish candle that can close below 113 like this, preferably maybe even a bit lower than 113, maybe even below 112.70, would be a good breakout candle to the downside. Obviously, the upside was already mentioned with the candle close that can push through 114.50. Looking at lower time frames, I really don't think it has much sense. I mean, we can see here there was momentum, that this was an ABC correction, that this was an ABC, or that this was A and this was ABC. That remains still to be seen. And because it's so choppy, you know, it's a little bit of a difficult read. For the moment, it does look like there's an ABC being built here, but it could easily bounce at or above or at, in between the 112.70 and 113 zone for maybe a new ABC backup within this range. So that's something that could play out maybe today or tomorrow, but that is kind of a range reversal trade idea that is risky, you know, because it is ultimately very choppy. And if there is a break, there could be a false break. If there is not a break, there could be a lot of zigzags and price volatility in between these levels. Difficult playing field. Just trying to explain, you know, the angles of this particular situation. Not an easy chart. Looking for daily candle breakouts, I think, is the best. Lower time frames could be quite volatile and a lot of price movements within this zone. And even if you get a breakout on lower time frames, it could be a false breakout. Pound dollar is pretty much the same. We did get a break below 127.20 and 127. We got a break, but then we got a pretty quick bounce back up and a pullback and then a bounce back up again. So every time the sellers are stepping in lower, right? Lower, 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 lower. So maybe it will eventually break. But here too, the key thing is the daily chart, right? And 2 days in a row, we had, you know, huge volatility, big wicks on both sides, but no winner, right? Both are dojis basically, and both have wicks on both sides. So very big battle, but no direction, no indication or information for us about what's next, from my view. And I don't have any particular favorite. I was always favoriting the bigger bullish bounce. So far that has not happened, and price is slowly but surely sinking. So I think that it's really 50-50. The triangle is out of the window. It's not a triangle anymore because it broke below this bottom. And I think it even broke below this bottom. Let me see. Yeah, slightly below this bottom even. So triangle is definitely not the case, but it could still be a corrective pattern. It could still be some type of a ABC and an ABC and an ABC. It could still be some type of flat correction if it bounces here. But for me to kind of believe that that is more likely, I would need to see price break above, this resistance zone at around 128.30 right here, and the long-term moving average. All right, so break above that, pull back, and then if we get a bounce, that could be the continuation higher. For the downside, that doesn't look that great either, because there could be a head and shoulders pattern, left shoulder, head, right shoulder, and there could be this reversal as well potential. So as price is falling here, I think it's going back into support, and there could be a bounce back up again, and then we're hitting the resistance. There could be a bounce back down again, right? So here too, just like the euro dollar, there could be many volatile moves within this range between 126.80 and 128.50, and even if we get a breakout on lower time frames, there could be a false break. The only break that might make sense to take a look at is one that occurs on the daily chart. So for the moment, I think this is looking like bounce territory back to the upside, but the target, who knows, it could be 127.75, which is the trend line here. It could bounce back down again. So it's the volatility makes it difficult to aim for a target, because price can turn at any spot, right? Look at all this price action here, how much ups and downs we got really just in that short piece of price action, or piece of chart. So difficult read regarding the pound dollar, but this is my thought, is that keeping on the daily chart is probably the best, and lower time frames, watch out for ABC zigzags, watch out for bounces, watch out for reversals on a dime. If you're by any chance interested in our ECS live servers, where we have pre-fact our own setups, entry, stop loss, take profits mentioned in the Telegram channel, feel free to check that out on our website, dailycurrency.com, or if you're by any chance interested in ecs.SWAT, which is my own methodology with the indicators, some of the indicators you saw, ECS candle there, check out ECS.SWAT. Of course, if not, no problem. We're looking forward to see you in the next video during the weekend with the new update on the euro dollar and pound dollar. Wish you all great trading. Cheers.